everyone. I'm Kathy. This is my trading partner, Boris. We're going to talk about why the first 2 weeks of April are terrible for terrible for trading, and it's basically Chop City. Boris, you want to elaborate?
Sure. The funny thing is that almost everybody forgets that this first 2 weeks of April, every single year, is really a terrible time. And the reason, of course, is kind of obvious. It's holiday time. It's Passover. It's Easter. There's a lot of, it's springtime, a lot of kids' vacations. So everybody kind of goes away and liquidity really dries up. Many of the Anglo-Saxon countries where the FX is really traded have lots of holidays. They take pretty much almost the whole week off. And you always forget about this because it's in the middle of the year, so you just don't realize that it's almost as bad as Christmas week. And as a matter of fact, Kay, it was funny. We were talking about this earlier. You had looked at your track record during this time of the year a couple of years back, and you realized that, wow, yeah, it really is very bad volatility-wise or liquidity-wise.
I mean, that's kind of why I wanted to share this with everyone because, to be honest, I didn't really think about it. And when you talked about how, usually this is Chop City, the first 2 weeks of April, I went back to my performance in the past 3 years for ZIP. And typically, we're averaging between 100 to last week, 283 pips. But last year, I lost 9 pips 1 week, and then I made 5 pips the other week in the first 2 weeks of April. The year before that, I lost 50 pips and made 30 pips. So basically, everything was just chopping left and right. And I think, from the seasonality perspective, like you were saying, the holidays, the fact that Europe just came off of daylight savings, and, we've got some, people all confused about the time. And then this year in particular, we're coming off this huge week with lots of banking sector news. We have zero data this week that's really of any consequence. I think, traders just want a break, and this consolidation and this price action that we're seeing Monday, where it could basically last for the rest of the week into next week before we get non-farm payrolls, where all we see is just back and forth, back and forth. I mean, what do you think?
Yeah, I think it's kind of like this, deadly combination of lack of macro data because we've pretty much had most of the monetary policy decisions made. We've, had our little panic run on the bank side done. So this lack of any further macro data combined with the fact that everybody's kind of taking time off and taking their eye off the ball really does create very choppy conditions. And so within these choppy conditions, I think it's the other thing that's really, really important is if you are going to trade, I think this is a place where you got to keep your targets much tighter and take them as they come because you're just not the critical, I think, theme of these next 2 weeks is there's very little continuation in price. And when there's very little continuation in price, it's going to create lots of frustration. If you're looking for kind of big hits, they're not coming, and you just get retraced back into your stop levels over and over again. That's exactly what chop is like. It's like a meat grinder.
Yeah, I think you're absolutely right. In terms of trading tactics, because we're traders first and analysts second, you got to be like a ninja, in and out, and just
Yeah.
try to grab those profits when you get them. Keep your position sizes small. And don't expect, big moves. Don't expect breakouts. Trade defensively. And once we get get to non-farm payrolls, I think that's really going to set the stage for what we will get for the rest of the month. Because that's really what everyone's watching. The market's pricing in aggressive rate cuts, and the real data that is going to matter will come, next week. And so from now until then, you just got to trade defensively.
Exactly. And I think that's really the key. The market just wants to see that we're really not tipping into any kind of a recessionary environment. And as long as we're able to muddle on through and keep the ship, steady, or at least, not tipping over, that probably in the long run is going to be positive for risk assets. But for now, it's a wait and see mode. There's no reason to be a hero. And there's certainly no reason to really waddle in here with large size into a very, very shallow pool of liquidity. Nobody's playing the game. So you might as well just sit this one out. Go relax, go to the park, enjoy the sunshine for the spring.
All right, good luck, everyone. Over and out.
Take care, guys. Bye-bye.